we insure about 40% more motor carriers than any other agency in the country.
The trucking industry is crazy right now, and being a broker can be stressful. Managing your invoices, billing, collecting, carrier base, and cash flow can feel like an impossible task. But I can tell you, OTR Solutions has figured out the impossible. They eliminate cash flow problems for carrier payments and ensure margin funding in just 24 hours with broker invoice factoring. OTR Solutions takes care of billing and collection processes with your shippers. And with lightning quick and accurate invoicing, your customers will never need another broker to handle their freight needs. Kick back, relax, and let OTR take care of your brokerage. If you want to know more, and I hope you do, check them out at otrsolutions.com/freight-caviar to see what they can do for your business. Or give them a call. They love to talk to brokers at 770-882-0124.
Good morning, everyone. Well, I guess for you, Paul, it's afternoon. Today we have a guest on, Chad. Chad, if you want to kind of introduce yourself and tell us a little bit about yourself and a little bit about your background, that would be great.
Yeah, absolutely. Thanks for having me on, guys. My name is Chad Eichelberger, President of Reliance Partners. We specialize in commercial insurance for the trucking and logistics industry. Prior to that, had been in the freight brokerage world. So no matter how far I try to get away from trucking, it seems like it keeps pulling me back in. So, but yeah, happy to be on here today, guys, and hope you guys had a great weekend.
Definitely.
Yeah, I feel like everybody says that, as soon as you try to get out of trucking, it sucks you back in. You
100%.
cannot get out, no matter what you try to do.
Yeah.
I feel like everybody tries to leave at one point, and then it just somehow they end up being or doing something back in trucking.
Yeah, it's that pull. You can't get away from it.
Definitely. And Chad, you have a very interesting background because you started at Access America Transport. If I'm not mistaken, that was your first logistics role. And you started off as a logistics manager, and then you advanced to being president. Can you kind of take us back to the beginnings of Access America when you started? How big was the office? How many people were there? And then kind of how it progressed and how big it got. And then obviously you guys got acquired by Coyote. So just tell us more about that.
Yeah, so I went to school for logistics at University of Tennessee. So right out of school, ended up working in Atlanta for Racetrack Petroleum for a little bit, but I knew I wanted to get back closer to home, and Chattanooga, kind of fit what I was looking for in that, and got really fortunate to get plugged in with these guys at Access America, Ted Allen, Barry Large, Alan Davis. So joined them early on. I mean, we had 6 or 7 employees total, probably at the time. Actually, I think I was the 8th employee. And we were in the top of a brick distributor, kind of in a tough neighborhood in Chattanooga. And so, at 5 o'clock, you were locking the gates up to get out of there. And so I remember many times having to get pulled out of there. They're like, guys, it's time to go because, the brickyard's shutting down. They got to lock the gates. So it's very... probably this conference room I'm in right now is actually probably bigger than what our office was at that point in time. So we were tucked away a little bit bigger than a closet, but absolutely great memories of that and learning and getting into the industry.
Yeah. So what year did you start at Access America, Joe? What year was that?
That would have been 05.
05? Okay. And then you were acquired by Coyote. Was it 2014?
Yeah, 14, they bought us.
Okay. So between those years, how was Access America able to grow the way it did? And can you give us insights into acquiring customers and then how the whole acquisition went down?
Yeah, absolutely. So, I mean, very much entrepreneurial in spirit is, how the company was built. Everything was about sales. We focused very much on the customer and, developing relationships with the motor carriers. So I can remember in the early years, our credit score probably at that point, when we were getting started, we had all these people that would only take a quick pay from us. And we even had trucking companies that would come in our office weekly and we would pay them weekly because we needed their capacity. And so we really built it out around that. And specifically in the Chattanooga area, it was very flatbed focused. And so
Mhm.
we really cut our teeth in that and expanded out from there and other office locations later on. But, very much, I remember we moved from that office that I started in probably 4 or 5 months later to a warehouse building. And we were like, wow, this is amazing. We never even thought about the fact that, each move we had sequentially, it was like, okay, we started to realize this was becoming a bigger company. So I think it was very much early on. It was, grinding the phones, working hard, whatever it took to get a load moved. We also were very big on, we're not going to give loads back. We're going to lose money. We lost money on probably 10% of the loads we did, but it was all
Oh, wow.
about taking care of the customer, building good rapport with the carriers. And, from that point in time, I think probably about 2007, 2008, and obviously the economy was starting to go through a kind of a down cycle. We started to land some bigger accounts. And so we got in with some large construction equipment manufacturers, and we kind of were able to go and parlay a local name, Komatsu, that we did business with here in Chattanooga, into other relationships within that space. And then pretty soon we looked around and we're doing business with all of them. And we're able to take that and start to get into these Fortune 500 brands. And so it was pretty neat to watch the progression of the company. We also, we ended up with an office in Minnesota that ended up being a really big hub for our network as well. I think when we sold, we had maybe 8 offices total. But, and when we sold, one of the things that we'd really pushed our people to do, and I got to see a lot of these offices, so it was cool going around and visiting with some of these, larger companies we were dealing with at the time. I think we had 94 Fortune 500 customers when we sold to Coyote. And one of the things that was really attractive, I think, is we started down a pathway with Coyote, and we talked to a few other people as well. But it was really interesting to see that they had built great technology. They had a very great execution model. We had what I think was a very great sales model, but we were probably, I think when we sold, we were $675 million run rate that year. And Coyote was a little bit bigger, but they had this execution model that they had gone much deeper with a lot of the enterprise level customers that we had as opposed to them. We had a much broader customer base and a lot of small, mid-sized shippers as well. But it was really neat to kind of watch all of that come together. And we were able to take advantage of the scale and the technology that they had built. And then our customer network and our people, obviously, that was what they were interested in. So it was a pretty neat deal. It was, pretty wild, I would say, 2 years kind of in the lead up to the deal, and then after the deal, getting the two put together. But great experience, and really enjoyed my time in brokerage.
Oh, wow. So the whole acquisition basically took about 2 years to get it done?
No, I would say that is the due diligence process, the lead up to the deal, and then us getting through the first year and getting all the integration done. I mean, it was probably 18 to 24 months for everything to be done, but in record time, we were operating on their technology platform within 30 days. And so we moved pretty fast. There was a lot of duplication of customers, more so than you would think, but it was really centered around probably 10 customers that we both were, top 2 or 3 players on. And so outside of that, the overlap was not to the degree that.
So duplication by customers, you mean you guys had the same customer?
Sure.
Right? Like basically they had that customer and you guys had that customer. So now it's just, you guys are both working with that. Okay.
Absolutely.
That's cool.
So, Chad, with the 8 people that were with you when you started at Access America, I know there's some very big profiles. Could you kind of name some of the people again and tell us what they ended up doing now? Because when Access America got acquired, all of a sudden, people got pretty rich, made some money off selling Access America, and then they started off different ventures across Chattanooga and really putting Chattanooga more on the map. Could you kind of get more into like that part of it and how Chattanooga has grown into being kind of a capital in like the freight brokerage and trucking world?
Yeah, absolutely. And I'm going to miss somebody here, so I apologize whoever it is that I missed. But so Ted, Allen, and Barry, who co-founded the company, they were CEO, COO, and CFO. So back, I guess it was probably 2008 or 2009, they promoted me to president. Ronald Ramsey had been promoted to executive vice president. Today, Ronald works with me at Reliance. He's our chief commercial officer. Steve Cox was our executive vice president, and everybody in the industry is aware of Steve.
Yeah.
Then Steve ran Minneapolis and obviously built that into a juggernaut for us, and was very, very, very integral in us scaling the business and growing. And so Ronald and him, Steve, of course, is president of Steam today.
Mm-hmm.
Ronald's here. We worked very closely together. And then later, Jason Provancha joined. And so Jason is CEO at Steam today. And so obviously he came on with us. I think he was our chief sales officer. Obviously the four of us, after Ted Allen Berry kind of transitioned out of the business, they stayed involved, and they checked they obviously checked in on us pretty frequently and dropped by and say hello. But Ted Allen Berry started Dynamo. And so Dynamo basically is a logistics, focused VC that's based here in Chattanooga. They've since gone on to co-found Brickyard. And, even prior to that, they had what was Lamppost Group. And Lamppost Group was very much focused on investing in early stage startups in Chattanooga and bringing that talent to Chattanooga. So you have all of those guys kind of doing that. And then when you look around today, you've got a lot of the Trident folks that have gone on to either be, high level in the organization or co-founded the company. They had been at Access America. Link Logistics, several of them had those ties to Access America. You look at, any number of the brokerages here, Max Trans that's in Chattanooga, KCH, some of the folks over at Covenant or US Express, even though they obviously had brokerages well established before us. It's been this kind of halo effect of all these companies in the city, have been able to go and attract talent, develop their own talent. And so it has been really neat to watch the city of Chattanooga really benefit from being experts in the logistics space. And then you've got other people that, didn't have a direct connection that have gone on and done great things as well. Trenco Logistics in town that we've watched what they've been able to do and, the success that they've had, and just tons of businesses like that. And I think in the city today, we looked it up not too long ago, and I think we insure 22 different freight brokerages here alone. And I know we don't insure everybody. So it's just the effect of, being, I would say the center of the industry, but a very prominent part of the industry in Chattanooga. Logistics is certainly, very prominent, for our city.
Chattanooga has the most employees in freight per capita in the U.S. because there's only like 180,000 people living in Chattanooga. It's just remarkable.
And most of them are in freight, huh?
Yeah,
that's crazy.
It's very much the center of our economy here.
Very neat.
I have a question though. Like, this is kind of maybe a little bit off the top. Well, I don't know if it's off the topic, but basically, how do these, I guess, bigger companies, how do they get structured? So, for example, when you were promoted to a president or something, do these companies give you stock in it? Do you get, like, once they sell out, do you get stock in it, or how does that work?
Well, no, I think it's different structures for different types of businesses. In our situation, we were fortunate, and I was fortunate that, the guys that I mentioned, Ted Allen Berry, they very much believed in taking care of employees. And so we were able to, without going into too many details, I think we had almost 30 different owners, equity holders in the company when we sold to Coyote. And so, obviously that a lot of that, that created a lot of wealth, not just with the three primary partners and the other partners that were investors in the business, but it created a lot for the employees that were part of that too.
That's awesome. That's awesome to hear though, that they kind of cared about, the people that actually helped out start the whole thing and made it into a success story.
Yeah.
No, absolutely.
How much was Access America Transport sold to Coyote? Is that a public number, or was that?
I think there is a public number out there that references it that you can find. I think it's actually the range is north of 200. I'll just leave it at that. But I think you can find the actual public number. But I won't reference it.
We'll go looking for it. That's awesome. So when Coyote acquired Access America Transport, Chad, you became the president of Brokerage. What was your time? What was like that transition like to working at Coyote? And how was it like working with Jeff Silver and everyone else? What was like the mindset difference between Chicago and Chattanooga?
It was definitely a difference. And Jeff, I remember we would go through the deal and we were talking, and he, his feedback with everybody is, hey, it's going to be different, and different doesn't mean it has to be better or worse, but it is going to be different. And Jeff, I got to know Jeff through that process and really enjoyed the time learning from him and seeing how they built their business, we built our business, and it was two different ways, and they both worked. But I think looking at Chicago and Chattanooga, I would say Chattanooga was a little bit more of a blue collar kind of workforce. I won't say blue collar, but a lot of people that, let's say, you don't have to go to college to be in freight brokerage, and so a lot of our people did. A lot of our people didn't. A lot of people that we hired, I mean, they came from an industry not connected at all, and it might have been their second or third job. Where what we saw in Chicago was a lot of Coyote they had built a recruitment model across a number of different schools and universities that were feeder programs into Coyote. And so very much that would be the first job they knew. And they moved from Michigan State to Chicago. And so I would just say the pathway that a lot of the employees at Access, whether they were in Chattanooga, Minnesota, Birmingham, wherever, the pathway to how they found success was probably different than the pathway to everyone a lot of the people at Coyote. But I would also say the cultures were not dissimilar. They certainly, the way we all arrived together were different, but getting to know everybody at Coyote, and, we had a really great group of people that supported us as we kind of integrated the two businesses together. I got to meet a ton of people, got to learn way more about pivot tables than I ever wanted to know. And now,
What's that?
luckily, yeah, they had a lot smarter people to do that than me, but really enjoyed it.
Very neat. What's a pivot table?
But, so in Excel, when we're going, I mean, we had to slice and dice a lot of the data and, a lot of different things, and the reporting, just the capabilities that Coyote had on that side of the business. We had very much been bootstrapped. We've been incredibly flat. And so it was kind of a new world when we had all these different options and all these different ways to look at data. And I enjoyed that process.
Okay. Okay. So the Coyote was a lot more, I guess, maybe not advanced, but they were more like data driven.
Yeah, I would say for sure.
Okay. Very interesting. And then you were there when they got acquired by UPS as well.
So I left right before that.
Right before. Okay.
Yeah. So right before that, I had a desire. I felt like I'd done the job that I was there to do, to bring the two companies together, to get our folks all operating on the same platform as Coyote, all compensated the same. We got through it. We really did it in record time, I think, just to the extent that they were fully integrated. But I figured out about the year mark, I knew I wanted to do something different, and I wanted to build something again. And I had an idea that, there was a transaction coming. I didn't know specifically which party it would be, but, at that point in time, I gave them 3 months heads up, worked through a transition plan with everybody, and left. And I said I was going to take like 3 or 4 months off. My son had some stuff going on medical wise at that point in time, and he's doing excellent now. But I thought, I'm just going to take this time off. And, after I went on a vacation, and I got back and I went to Publix and Target a couple of times, and I thought, I can't do this. I gotta go back to work.
Gotta go back to work, huh?
Yeah, I gotta work. It's crazy. So Andrew Ladabashay had been a very, close personal friend. I mean, a best friend. And him and I had been talking through the years about how much fun it would be to work together. And he had a similar pathway in that, he had worked in an organization. He, we had the same at that point in time. We had the same angel investors, or same investors that were behind Access America. And so it made a lot of sense for me to join up with him. And so I think at that point in time, it was maybe $15 million business. And we just started getting after it, building a team, working from a technology standpoint to build solutions that didn't exist in insurance. And I mean, that was, I guess, 7 or 8 years ago today now, but it was just a really exciting time. And when I jumped back in, I never looked back. And I got to stay connected to the industry. I got to keep the relationships that I'd developed in the industry, but I got to learn something new. And so it's been a blast here.
That's awesome.
That's very interesting. So you went from working at a brokerage, running a brokerage, to running an insurance company that sells to brokerages and trucking companies. How was that transition like? And what are the differences in terms of selling, and what's like the overall, I don't know, like the business? Because I don't know much about insurance. Can you just kind of fill us in?
Yeah,
on how
sure.
that looks like?
Well, I would say one thing, you don't get as many calls on the weekends from shippers when, we did have kind of a nightmare scenario in the access days at one point in time where, let's just say a very large retailer, when I saw the call and the small town where this large retailer is based, and I see that on a Sunday and you get to deliver the news, they're following up on some stolen loads, and you're coming into the office along with all of your team working through nightmare scenarios like that. I feel like the insurance is a little bit more stable. We all still get calls on the weekend. Our customers have situations that occur and we've got to be there for them. But I would say the work-life balance, I enjoyed a little bit more on this side. I think the intensity is still there because, if you walk in our office, you guys have been in the office, we have people calling trucking companies across the country, but they have a renewal. And generally it's 1 or 2 renewal dates a year. You work through that, you maintain the relationship, and that's that. But in freight brokerage, it was every day. You're dialing to figure out what's going on, or you're accepting these tenders. You're making sure the loads are covered. There's a touch point with the customer every day, where most of our customers, some of them we do, but most of our customers, there may not be a daily touch point. So I think I enjoy that. And, the number of customers we can support here, it's certainly, an account manager at Reliance Partners may have 100 different small fleets that they work with, or they may have 10 very large fleets that they work with, or, a good number of large enterprise freight brokers, or a good number of small. So everybody kind of, in the same vein, what we did in the freight brokerage world, insurance is a little different in that I do feel like you can take a step back and focus more on the relationship and think more long-term than covering that load that same day.
Definitely. So, Chad, with this downturn, have you been seeing a lot of trucking companies going out of business?
Yeah, we have. I think like everybody has. I mean, I think everyone in the industry, it's noticeable what's happening. You've got a lot of motor carriers too that entered during COVID. And so their insurance rates, if you're a newer venture, obviously you're going to pay a little bit more per truck. And so some of their insurance rates are higher. Their cost structure, their operating structure is, it's baked in at a different level than what the market's going to bear today. And so we see people that, are still doing well, but then we also see others that, the people that are doing well too, generally, they've got a good mix of, stable freight. If you got contract freight right now, obviously you're in good shape. The larger motor carriers are faring better than the small carriers that are dependent on broker freight. But at the same time, you have small carriers that, have low operating cost and have been in business. They've been through these cycles. They put money back for something exactly like this that are doing very well. So at the end of the day, everybody's impacted, but I think to the degree, a lot of it just depends on your cost structure.
You guys are probably like the first ones to see the effect though, right? I feel like the insurance companies would be the first ones to see what's actually going on in the industry. Because I feel like if we were to close down, I would be the first thing to cancel is insurance, Well, like if I was to see the operation, and then you kind of sell the truck, then you sell the equipment, then you sell whatever else you have. But yeah.
Yeah, absolutely. So we see it every single day. And, there was a marked, I would say, really noticeable increase. Q4, we saw a trend line Q3 of last year. We knew kind of where the market was headed. And Q4 certainly was a lot tougher environment. We saw the same thing in Q1 and to date in Q2s. It doesn't feel like it's gotten worse. It just feels like there's still this continual,
it's just like slowly going, down. And that's what it seems like. I don't know. It seems like everybody's going through this kind of struggle. So because you guys, you insure, I remember when we were in your office, you said you guys insure like a crazy amount of small fleets, right? So what percentage do you guys insure, like owner operators and small fleets? It's a pretty big percent, right? Throughout the whole industry.
Yes, so we know our position in the industry from the data we've been able to utilize to measure this. We insure about 40% more motor carriers than any other agency in the country. And
Yeah.
so of that mix, when we break it down by premium, it's pretty evenly distributed between what we call small fleet, 1 to 10. And then we've got our 10 to 25, that's our transportation division. And then we've got our fleet division that's, north of 25. And that those are pretty even to us in terms of premium, but in terms of count of fleets, the 1 to 10 obviously is where we write the largest number.
Hmm.
But we do a lot on the large side of and early on during this too, we saw a big migration of our small motor carriers, a lot of times leasing on with our fleets. And that's still happening today, but it may have slowed down a little bit.
So which ones of those do you see the mostly like kind of ceasing operation or stopping right now? Is it the smaller ones or the medium ones or the larger ones?
1 to 5 unit.
1 to 5 unit.
Yeah,
Okay.
1 to 5 unit, more so than anywhere else. I mean, we've also benefited, in our business in some cases because we have, we do insure a lot of kind of larger owner operator based fleets, and we've seen some of them really grow during this time because a lot of the small guys are going and leasing on.
Yeah,
Uh,
that makes sense.
uh,
But I feel like a lot of these owner operators, they're hopping from one company to the next because they think the grass is greener somewhere else. And it's like it's not that much better here, Like I don't know. That's what I kind of notice. People will reach out to me all the time. Hey, can we lease on? Can we do this? And it's like it's not that much better here, Well, you're gonna make maybe a little bit more, but it's kind of everybody struggling, at the same time. So unless they have like dedicated, if they're running for somebody that has dedicated runs all the time, so.
yeah.
But
Yeah, no, I agree. I mean, we see it. I mean, I think that's just a continual churn you see in the space. And, we have, I think certainly now more so than Q4, a larger percentage of the companies that are exiting trucking altogether, as
Mhm.
opposed to before. I felt like it was just this movement of units from small fleets over to the larger fleets. It feels like now there are more actual units being parked and capacity
Yeah.
being purged out of the system. So we do feel like we're seeing that right now.
Okay.
Uh, Chad, how could a trucking company lower their insurance costs? Like, what are some simple ways?
Well, I mean, a lot of, some of these you have no control over in terms of when you start a fleet or you start a new entity, you've only got a handful of insurance markets that are going to be willing to insure you. And they're going to look at driver experience. You don't have control over that until you've just had the experience. And so there's certain factors like that you can control, certain factors you can't. Where you operate makes a big difference too. Where you're domiciled, the state you're domiciled in, obviously that plays a role. The biggest drivers obviously losses, and so in a lot of there's been a big push from a number of new market entrants over the past couple of years, leveraging data in underwriting, and so driver behavior, whether it's ELD connectivity, and looking for hard braking, speeding, things that can be measured and monitored, forward-facing cameras, even a couple markets. And it's, obviously not all drivers love it, but driver-facing cameras, we're seeing those play a bigger role in the marketplace on the small side of it, and being able to go and get lower insurance premiums. Again, the driver too, it still comes back to losses and loss frequency and loss severity. And so your CAB score, most motor carriers have probably heard about CAB because it uses the FMCSA data, and basically replicates that data. And that's what underwriters use when they're looking at a risk to determine if this is a risk, what the price should be on this in order to perform at a, profitable loss ratio. And so using that data, they're going to look at your drivers. And so I would say, look at the drivers that you're hiring, their experience, any type of history they have, because when those drivers are associated with you, that doesn't just fall off. You let them go, and there is you have an at fault
Right.
incident that occurs and it's severe. That's going to stay with you. That's not just going to fall off. And so, and you're going to have that on there for at least 3 years. When underwriters go and look at that account, they're going to see that loss, and you can explain all you want that the driver's not there, but the driver was there. And so you've got things that are within your control as a motor carrier that you can do. Having a safety resource is important. We put a lot of emphasis on safety. We've got a safety seminar that we host. We try to do quarterly safety calls where people can ask questions of our team. And so really, again, it all boils back down to your operations and safety. I mean, that's the biggest driver.
Yeah, I think safety is definitely one of the most important thing in this industry too. Like even with insurance, with working with brokers, just everything in general. I think that's like the most important thing. That's what I've noticed.
Yeah, and we've seen too, just the, we're fortunate too that in our environment today, we're not going to grow at the rate that we've been accustomed to growing at this year, but we're still going to grow. We're seeing people leave on the small fleet side, and generally, the way we're set up, we're going and replacing that business. But certainly we were impacted. I know the freight brokers that we work with are impacted. The fleets are significantly impacted. So, I think just the industry as a whole, I don't see anybody that's really immune from this.
Chad, you mentioned that depending on the state that you're insured in, the costs will differ. Can you let us kind of tell us which states are the cheapest to be insured in and which ones are typically the most expensive? Just overall, it doesn't have to be completely accurate, but
yeah, I would say just naming some states that are hot spots for losses, and that's going to drive insurance premium, and that's going to cause less insurance companies to want to operate in those states and insure, Class 8. And there's some tort reform that are happening in a few of these states, Florida and Texas. Texas, obviously, there's been some nuclear verdicts, but there's been some tort reform taking place. Same with Florida. Georgia, right now, they're trying to work through some of that. Those are states that we've seen elevated pricing in. Florida, and particularly south of 5-4, that's an area that, historically has been very difficult for commercial trucking. When you also look around Louisiana as a whole, it's just, historically been very tough, maybe one of the toughest states. New York, California would make the list, but maybe not as high as some would anticipate. But for sure, you see more of a lack of commercial insurance carriers in Louisiana, New York, South Florida than you probably do anywhere else in the country.
Okay, that's very interesting. What about in terms of cheaper insurance rates? Where are those typically seen?
A lot of the Midwest is typically a pretty good area.
Okay.
Outside of Cook County. In most situations, insurance underwriters if they're looking at a risk, they're looking, if you're long haul, your rates are going to be higher than if you're short haul. There's only a few places that rule doesn't apply, and one of those is Cook County. If you're based in Cook County, they want to see that you're long haul and you're not staying local because your risks are higher. And you also have kind of these sub markets, let's say Houston or a Chicago or even in Atlanta. Now we're seeing it where insurance rates are higher than the states at large. Illinois overall, actually, we see pretty favorable rates there. Cook County just happens to be very elevated. But like Indiana, Ohio, Wisconsin, I mean, those are all very good, favorable states for insurance. Tennessee is not a bad state. Some other states in the Southeast.
What about North Carolina? I don't know if I missed it because I had to jump off for a second and got disconnected. But what about North Carolina? How is that state?
North Carolina in the Southeast would be more favorable. Now you are a little bit market limited there, and in North Carolina, but I would say that's more favorable in the Southeast than more so than a Georgia or a Florida. But again, they're also going to look where you're domiciled, because we've had people ask this question, and the answer is no. Where you're domiciled doesn't necessarily dictate, if you're going to have good or bad rates. At the end of the day, they're going to look at your radius of operation. If you're domiciled in North Carolina and all your drivers are in Florida, you're going to be rated like you're in Florida. So we've had people before should I just move? Well, no, I mean, the answer is we can't tell you that, one. And two, we're going to be underwritten where you operate.
Makes sense.
Interesting.
How has your score been lately and your insurance rates? Have they been going down?
A little bit. They've been pretty good. I think we could still do much better. I think we're still paying over $20,000 per truck per year. So hopefully next year or something, but it's only our third year in business. I think like Chad said, it's kind of depends on your, how long you're in the business and if you got a proven history to go with it. So I think hopefully
So
as time goes on, will be cheaper and cheaper.
let's just say, for example, Bob's paying right now for dry vans typically around 20,000. Chad, from like what you know, like what would like a large fleet that's been in business for years, great safety scores, plenty of trucks, what would they typically pay per truck per year?
I mean, it is all over the board. It's such a. I mean,
What's like the lowest maybe that you've seen like per truck?
well, if they're taking
7,000.
Wait,
yeah,
sorry.
if the trucking company's taking a big retention. I mean, we've got motor carriers that are paying $3,500 a truck,
Wow.
or probably even less than that, but they're taking on a retention. They're taking on risk themselves. They've been in business for, 15 years. Their losses are great. The radius they operate in is very static. They're dedicated lanes. I mean, there's so many factors out there. Their drivers don't turn over a lot. They're going to look at all of that all that goes in. And if you're a new venture or a newer venture and you've grown very quickly, you eliminate some different options of insurance markets, because 20,000 certainly for 3 years in business, I would say, is elevated. But it may be due to quick, fast growth, and again, the options you have out there. I would say your options are going to open up a lot this year, though, getting past that third year in business, because we see every year you've been in business, typically if losses are favorable, then you have more and more options in the market.
That's what I heard too. And even our first year we were with Canal, they didn't even let us get they were like, nope. So the first full year we couldn't even get more than 2 trucks.
Yeah, and you see those restrictions a lot from the markets.
Yeah. I'm just wondering, have insurance rates gone down this year with the decrease in the freight market and a lot of trucking companies going out of business, or has it been like the opposite, that insurance rates continue to increase?
So I think it's really by line of coverage. So auto liability, we've certainly seen that there's, when you look at capacity in the marketplace to insure that business, there certainly has been an increase in capacity over the last few years. And suddenly with this downturn, you are seeing more competitive auto liability options. You're also seeing like physical damage and cargo rates have been pretty volatile, more so than what they have been historically, because you've also had all this equipment that was purchased, and you've had all this, if you look out at the inflation pressure that the market's been feeling, the equipment, it's gone up in value, it's gone down in value, but it's still there's some, and if you're going and financing that today, you've got all of the interest to deal with on that as well. So I would say when we look at the marketplace, we see auto liabilities improved, physical damage and cargo still pretty tough, even though that's generally a smaller line of coverage. The rates there are certainly going to be probably up overall for the industry. And then workers' comp actually has been somewhat favorable, as of late. But you're seeing in an excess market is still very much a hard market, and it's continuing to increase. So I would say for a large fleet, I don't know that they're going to notice a big decrease. They may even see an increase depending on losses and depending on excess. If they buy a lot of excess, maybe a smaller fleet that has been in business for 2 or 3 years, you're going to potentially pick up a lot of relief.
Got it. Very interesting.
It's crazy because I feel like everybody said once the ELD comes out, things are going to be so much more safer. Insurance is going to go down. It's going to make everyone's life easier. I don't think that's happening, though. I feel like ELDs made things only worse. I don't know if it's true, though, but that's just my opinion.
Tort reform would help more than anything right now, too, because when you drive on your way to work and you see a dozen attorney billboards wanting to sue motor carriers, that's not helpful either.
Exactly. What would you say? What was the name of it?
Tort reform. I mean, and you're seeing
Tort
that
reform?
take place. Yeah, tort reform. You're seeing it happen in some states, and I think there's a broader push for it to happen in a more significant way for the space. But that certainly would help insurance rates if you've got more favorable laws on the books.
So what is that exactly, court reform, where they can't sue you for a certain amount, or they can't just put the billboards on? Could you break that down a little bit?
No, it had nothing to do with the billboards relative to that, but it's putting, not even necessarily caps on amounts. And in some cases, yes, caps, but going and looking at some of the drivers of this, like for instance, in Florida, and I don't have the exact number, but if you go and you look at the payouts that have happened in recent hurricanes, the majority of the money hasn't gone to the homeowner. It's gone to an attorney that goes and represents comes and shows up and says, hey, you're going to need a new roof because of this. And they go and they sign up with that attorney. Well, the attorney is going to get more of that money than the homeowner. The homeowner is going to get the new roof, but the attorney, the insurance company is going to be paying all of that cost. And wow. That cost, why should they get more than the homeowner gets to fix the roof? And so we all pay for that. Everybody pays for that. And so you've got a lot of scenarios like that where tort reform, even if it's not in full scale in every state, some of that limits, the payments that are happening, these payments that shouldn't be happening. And then you've also just got a lot of fraud that's out there in the space too, where you've got attorneys that are calling on, they're calling motor carrier, or they're calling parties that were involved in accidents with motor carriers, and they're trying to go and steer them toward a doctor. And then suddenly you've got something that was a fender bender that is a $500,000 loss.
Wow. That's crazy.
Yeah, it is.
There's scams and fraud everywhere, even with towing companies. That's what they need to do too, is limit the towing company at a certain cap.
Yeah.
Yeah. I just had a story.
Chad, did you hear about the thing that happened with my friend? There was a towing bill, $6,000. We had to pay cash.
Oh yeah, we see it. We see it on the freight broker side quite frequently too, where there is a motor carrier that's involved and doesn't have towing covered. And so and right now, especially with the way the market is, they don't have the money to get that trailer out of there. Trailer's been towed in. Customer is demanding the broker get this delivered. Motor carrier can't deliver it. Nothing they can do. They don't have coverage. And the yard is holding it ransom. And sometimes you're seeing like, oh, every day we keep it, this is $1,500 more. It's literally make up your rate. And so it ends up, either the insurance company or the freight broker, if the motor carrier doesn't have that coverage, they step in and try to negotiate with the yard, or the freight broker pays the ransom. But we see it all day. And I know trucking companies deal with it. And it's terrible.
Yeah.
It's crazy that you said that the brokers are dealing with it now, because I feel like actually like 2 weeks ago, a broker reached out to me that one of their drivers had their load and the towing company towed the truck with the load. And I'm pretty sure the freight broker had to pay or help the driver to get the truck out so he can go deliver that load.
Oh yeah, they're not going to let
the driver just had no money to pay for it.
Yeah, until the towing bill. So that's the thing on top of that. That's just the storage. The towing bill, freight brokers are, oftentimes having to turn around and pay that, or their insurance company is paying the towing. So they're having to pay that to get the cargo released.
So you've been paying them out, Chad.
I wonder if they back charge it though from the carrier. Like they would have to, right? Because that would fall under the carrier.
Oh, well, I mean, if the carrier is able to pay, right now what we're seeing is that's not always the case. And the motor carriers, I mean, you can't necessarily withhold that money from, load didn't deliver, obviously, but there's not enough you're going to be able to withhold that's going to cover that. So a lot of times it's just a loss for the freight broker.
Wow. Huh. I didn't even think about that. That's crazy. And probably these towing companies probably know that. So that's why they're just charging these crazy numbers that they make up. But something needs to be done. I need to go talk to the local people here, or talk to the government here and figure something out.
Bob and I were talking about that last week, because Bob had in a situation where his friend had a $6,000 toll bill, or towing bill for 16 miles, and it was the the truck got towed because it parked overnight where it wasn't supposed to. And we were talking.
He didn't pay for parking. $16. That's what it was. He didn't see the sign because it was blocked off by another truck. He parked in a parking spot. He just didn't pay the $15 parking. So that cost him $6,000.
So what I said, the reason why they charge so much is because typically insurance companies pay it out, right, Chad? Because let's just say that you get a towing bill, like you're not going to go fight it typically, right? Or how does that work? Like if like Reliance Partners gets just an obscene towing bill charge, what do you do with that?
We're the agency, so I would say the one distinction is we would help facilitate filing that with the insurance company.
Okay.
We don't. So we're strictly the agent. To your point there, it all depends on the coverages and the policy, and for both the trucking company and the freight broker. And I mean, you've got scenarios where there's not coverage for anybody, and so and you've got to, hey, do I pay this, ransom, or this towing bill that obviously is not as well above the market, and we've seen people just walk away.
Yeah.
So being an insurance agent sounds like a much nicer job.
Yeah, we're not always, but we're obviously an intermediary, just
Yeah.
just like a freight broker is, but we access the markets, and we're there to, our sole job is to support trucking companies and freight brokerages. So I mean, that's what we do. That's what we
Definitely.
focus on. And I think there are a lot of parallels out there, but certainly we facilitate filing this with the insurance markets, but we can't ever make a determination. Nobody can call one of our agents today and we can say, oh, the claim you're filing right now, this will be paid on this date, unless we've heard that from the insurance market. We're a conduit to get to the market.
Definitely. How did the whole idea of Reliance come about? How did you realize that there was a need for an insurance agency in the industry, and how were you able to grow it?
Well, I can't say I realized there was a need. I think that would be more Andrew, a business partner, CEO. He, he had basically his timing was probably about as bad as any point in time you could actually start an agency. But he left a large kind of regional agency in the Midwest, jumped in, started Reliance at the end of 08, beginning of 09, during the worst financial crisis ever.
Oh yeah.
So he had just been doing that. He'd been working in the space. He's very entrepreneurial, wanted to build something. And he did that, kind of coupled with our angel investors that we had at the time, and was able to scale the business. And, we've been able to continue scaling it, from 15 being about, let's call it $15 million in total written premium. This year we'll do north of 500 million.
Wow.
So we've seen obviously a lot of success, a lot of growth that's happened during that period of time. But I think looking at the business model as a whole, I mean, I love the model because it touches the industry. Being a specialist in the industry, focusing just on this is kind of unique. We don't see any other players nationally at scale that do what we do and only do trucking, that service every part of the market. You've got people that generally a lot of times shy away from small fleets and only go after fleets where we want it all. And then on the brokerage side too, obviously, we feel like that's something we understand well. We touch 44 of the top 100 largest freight brokers today with at least a line of coverage. So for us, like, just the industry, I mean, we love the space, and we like being specialists in it.
That's awesome.
Yeah. What does the future hold for Reliance?
So we certainly, so last year we took on investment from Carousel Capital, a private equity firm out of Charlotte. They have been fantastic. They've helped support us in growing. We actually opened an office in Phoenix, I think January, that as of the end of this month, we'll have over 40 people in that office. And so that's going to more or less kind of serve as a West Coast hub for us. We continue to invest heavily in technology. We've built a lot of our own technology, whether it's anything from our CRM to rating modules to API connectivity. We're doing a lot of stuff on that front. So we feel like just the direction of the industry, the more transparent we can be with motor carriers, because a lot of times, like Bob, to your point, you're paying $20,000, but you're only getting the quote back that you're being told is the lowest. How great would it be if you had a portal you could go in and you see why you're declined by insurance markets, or you see what the other pricing was, just something that is more transparent for the end user. And nobody's done that. And so that's what we're trying to do as well, to provide just that visibility into the process. It's kind of, you send your information to an insurance agent, they come back with a rate. Well, what does it all look like, and how can that help you improve your business?
Oh yeah, that would be sweet. Exactly, because sometimes we don't even know. We wait till the last kind of minute, and they're like, "Well, this is what it is," and it's like, "Dang, this is a lot." But
yeah, and then you don't have any other options, and you don't understand why. And so we try to be transparent today, but if we can provide that through technology, which is what we're working to do, that's great. We look at a lot of data and analytics around the space too. We can generally look at a risk and tell you the probability of which insurance carrier is going to write that. We obviously track any type of metrics around market movement, customer retention, everything. But for us, we really see a vision over the next 3 years to being well north of $1 billion, hopefully having a lot of enhanced technology solutions. We've already done a lot of that, but a lot that we're going to be able to get in the hands of, the motor carriers and freight brokers we support.
Definitely. Great story, Chad. I love the whole, show talking to you about your beginning and now Reliance. And I mean, and we're obviously rooting for you and Reliance Partners. It was great to meet you in person as well.
Likewise.
Chad, thanks for coming on the show. If anyone would be interested in potentially getting a quote from Reliance or just getting more information on Reliance, who should they reach out to, and I don't know, maybe contact?
Yeah, through our website's great, but I mean, feel free to call us. I mean, we've got 10 locations around the country. If you go and put Reliance Partners in, the one closest to you is probably going to pop up. So we always like getting people on the phone, but if you want to go through our website portal, you're able to do that. We would absolutely love an opportunity to work on anyone's insurance. And, we're not limited to just, dry van, flatbed, reefer over the road. I mean, whether it's pneumatic or intermodal, whatever, a short haul, long haul, dump trucks, we do all of that. So would love an opportunity and really appreciate you guys having me on and enjoy talking to you today.
Awesome.
Likewise,
Chad.
Thank you, Chad. Yeah, that was awesome. Thanks for coming on, for sure.
Thanks for tuning in to the Daily FreightCaviar Podcast. If you enjoyed the podcast, or if you didn't, leave a review. Let me know what you think. I appreciate any feedback. If you'd like to have more FreightCaviar content, go to freightcaviar.com and subscribe to my email newsletter.